Hello, my name is Prabhu Ramachandran and I've been an active and passionate forex trader for the last couple of years. And I've been consistently trading the euro yen pair mainly because it's highly volatile. And as day traders, that's what we really look for, and that's what is most helpful. After a few hiccups as a beginner, I have found a way to be consistently profitable, and my intention of posting my analysis every day here is to help people be a little more profitable with the forex trading, and the more experienced ones, to, of course, to give me their reviews so that I can make my changes and correct my mistakes that eventually everybody makes. Anyways, since it's the beginning of the week, let's start with the weekly time frame. And here, I have a bearish wedge pattern over here, though it is not the most convincing of patterns, or it doesn't look so perfect. But there is every chances that it might really work. We see that this pattern broke out over here at this point, and after that, there has been a couple of bullish candles, which actually turned out to be a kind of engulfing pattern, and then it's been within a range. It's traded within a range for the last couple of weeks. But what's significant for us in the last week is that it tried to test the previous highs that it had formed, which was at around 133.80, but it managed to reach up to 133.36. This could be a double top, though typically on a double top we would expect the second candle to be higher than the previous top. Previous top, yes. But anyways, it could still work because it's still in the frame of our wedge pattern. So to formulate our analysis and to find out entries for the coming week, let's look into the smaller time frames. Let's first go to the daily time frame. Here I've marked the black line is the weekly pivot point, the red lines are the weekly resistances, and the green lines are the weekly supports. What I have marked here is a harmonic ABCD pattern which has almost achieved its target. Now this is A, B, C, and D. Now the typically the market does not leave behind the targets, and here what has happened is it went up to 133.36, whereas the target for the ABCD pattern was actually at around 133.60 area. So that's about a 20 odd pips which it left behind, but after that the retracement has been quite significant, though there is still a possibility that the market might just may show a splurge up to at least achieve the target, even if it does not want to go higher up. So in this situation, how do we really decide on entry points? It's kind of a little tricky, but let's look at the 4-hour time frame first. This is a 4-hour time frame, and here I have another harmonic pattern: A, B, C, and D. Though my B, C, and CD legs have been on an assumption, but the assumption is based on the fact that the market likes the euro yen pair, especially likes the 618 retracement, and this leg is the 618 retracement of this upward move, and the BC leg is the 618 retracement of this downward move, and this would just be a 100% extension of the AB leg. And what is interesting for us is the target of this ABCD pattern is 130.30, yeah, around the 130.40 area. And if you look at the daily time frame target of this leg, which is equivalent to the BC leg over here, is also around the same thing, 130.35. So this is an agreement, and whenever there is an agreement in the market, there is a good possibility that it will be achieved. So coming back to the 4-hour time frame, so this, though it's on an assumption, it could actually still work, and this could be the framework to base our weekly trade pattern. Now we see that it is exactly somewhere in between this AB leg, so this would not be a very good area to really enter, and we should either wait for the market to complete this retracement at 618 and look for an opportunity to go long if you're a scalp trader, because this is also worth about 130 pips, which is not small. And like I said, another reason why there is a risk involved over here is because the market has left behind about a 20 pips, 20-25 pips over here from its reaching its target. So there is every possibility there might be a splurge up to first achieve that target before it wants to continue below. So assuming that the market might go ahead and hit the first target at around 131.20, we could look for some candlestick patterns over here or some other patterns to help us go long for about 130 pips and then continue short for the target for the daily target and the 4-hour harmonic target at around 130.40. Now, what could actually help us over here to see why this frame could really work, or even the 618 extension is possible, is if you look at the 1-hour chart. Here, this has been the first fall after the consolidation in this region, the first fall, and then this retracement has been about 618, and again a harmonic pattern A, B, C, and D. Now, the market has continued to fall after that, and then it's been the weekend closing movement which has happened over here. So for this harmonic pattern to achieve its target, it has to finish this ABCD leg, and again we look for an agreement over here. This target is at 131.25 area, which coincides with the 618 retracement which we saw on the 4-hour time frame, which is at 131.20. So another possibility and another reason why the market should actually achieve this. So this would be the trading plan for the coming week. We will look for the market to reach either the 131.20 area, which would be really logical from this point of view, or there could be a splurge up to really go ahead and finish its first target, which is at around 133.60 area, 133.60, 133.70 area, which it left behind. So let's hope it actually works according to this trading plan, and hope everybody has a profitable week ahead. Please come back to see my everyday analysis and give me your reviews, and yeah, we could help each other improve our trading ideas and be more profitable. Thank you very much. Bye bye.